folks, welcome back to my channel. My name is Dan Frio, where I try to educate you guys on real estate because the main purpose behind all this is I'm a mortgage advisor, have been for over 30 years. I'm helping you dissect this current market that we're in today. So I had a conversation with one of my neighbors over the weekend, and they're moving back to California, and he just stopped by to pick my brain on a bunch of things. And one of the things was exactly what you're seeing on your screen right now. He said, Dan, I'm probably going to wait about a year or so for rates to come down and housing prices to stabilize and crash. I'm hoping for that crash that everybody else is waiting for. So what's your kind of long-term outlook on housing in regards to, everything in general? Am I doing a prudent decision? So this morning I come in and I'm like, okay, let me just Google this thing, because I don't get where so many people are wondering or waiting on that crash. So I was shocked to find out this. Waiting on a housing crash statistics. What is it? Well, almost 80% of Gen Zs think we're going to have a housing crash and mortgage rates are going to plummet. So that's what I really wanted to dissect today. So basically, today's video is going to be basically economics. Okay, so the economics behind things. Let's just look at housing, for example. Housing prices are going to be determined, well, the same way any other price of any other product is determined. The supply and demand of something, okay? It's not because, what's affordable to you might not be affordable to me, or what's affordable to me might not be affordable to you. So housing affordability is a concept, and I get it. But also, if you're looking for housing, if you're not looking to buy a house, your shelter costs, even if you're renting, most places saw a 25% increase in housing or rent costs over the last 2 years, 25% increase. So then a lot of people are saying, well, you're seeing price increases on your housing payment because your taxes and insurance went up. Yep, they did, but not at the extent of my payments going up 25%. And many times the things that are happening right now, they're just a one-time event. So for example, like in Florida, people are saying the homeowners insurance in Florida just went bonkers. Okay, they did. They basically went way up because there is a huge need for them, and now the supply is down. Perfect example, perfect segment into this. We have insurance companies pulling out of Florida, but the demand is spiking, so what happens? The prices go out the roof. A perfect example of what's going on today. So let's just dissect supply and demand today. Okay, so that's today's topic. Let's go to the first thing, and we have housing supply. Now, this is new housing supply. I'm going to get my head out of the mix so you guys can see this. Here's where housing supply has been for the new housing market since the last 25 years. Okay, you're going to see these spikes and anomalies that happen throughout the years. You see it here, back here when the crash happened, and here's where we are today. But you see down through here, we peaked out last year. Okay, April, May, June of 2022, that's when everything peaked out. And then we've been on a consistent downward trend since then. So look at May of 2023, we have 6.7 new construction homes. Okay, I'm just using that as the context. We go up here, we have, almost, I can't get to that number, but let's say it's 11 or 12. So half of where we are. So we have half of new home constructions hitting the market. Again, guys, we're looking at the number of units. Then we go over to existing homes. Here's how many existing homes are in the market. So you go back to the time of the housing crash, back through these areas here, and here's where we are. So we have housing right through here. Basically, one of the lowest levels we've seen in, basically the last 25 years. Okay, so we have dismal numbers of houses, new home construction. We have hardly any existing home sales. And then we go over to foreclosures. Where are foreclosures right now? Now, guys, you're going to see every video out there saying foreclosures are running rampant. They are skyrocketing. Well, the reason being is if you put it in the context of 2021-ish, when we had a foreclosure moratorium where you couldn't really legally foreclose on anybody, it's an easy number to go from zero to anywhere is going to be an upward trajectory. So you can see right here, though, foreclosure filings were down 89% from the peak of 2.9 million in 2020 or 2010. So when we were in that catastrophic, dismal times when the housing market popped, we're 89% lower in foreclosures than we were at that time. So let's just put this in perspective. We have the demand now, or the supply. We have new home constructions way down. Permits are starting to go back up, but they're way down. Existing homes sales are basically nothing. And we have foreclosures 90% less than where we were back at the crash time in 2010. So we don't have any supply in the market. Okay, this just hopefully proved it for you. Or we don't have even half the supply that we did in 2008 to 2010 when the crash occurred. Okay, so the supply isn't there. The demand has been tapered, but not to the point where, the house number of existing homes out there are being gobbled up by people demanding those, because you're seeing a stability in home prices. So what this basically means, let's just roll it in a nutshell. We haven't seen a crash. We haven't seen a crash. People have been saying it since 2020. Now we're in 2023. So what's stabilizing this thing? Well, there's no houses on the market. So what is on the market, it's going to hold its value because there's a big supply and demand divergence here. Let's go back to my neighbor. Here's one of the reasons why they put the house on the market. He actually said this to me. He's like, Dan, there's no houses in Hunt Club. We live in a Hunt Club. It's a development. He says, there's one other house on the market, this whole development for sale. He's like, so I figured I would sell because of supply and demand. He got basically what they were asking for it, because why? There's no supply and the demand is there. So if you want to live in our neighborhood, you have to pay because you can only buy one of two homes. So hopefully that gives you some context of what's going on in housing today. Now we talk about rates. Why are we where we are today? Well, the federal government way overstimulated. The Federal Reserve held rates way too low, way too long. So we have all this pent up money in the system. It is working its way out. And once the inflation numbers comes down, and I'm saying this year we're going to probably see a two handle, a low 3 or 2 handle on inflation. What I mean is rates in the inflation number are going to be in the high 2s or low 3s. I'm predicting probably within the next 90 days. And mark my word for it, and you can tag this video on it, leave some comments down below, and we can track this thing for the next 3 months if you guys want to fact check me. So basically that's what's going on right now. I'm predicting that rates are going to start easing back down once the Federal Reserve, especially the shelter numbers on the Federal Reserve, what they're looking at in inflation, once that comes in line. Because I'm telling you right now, when the shelter number really comes in line with the Federal Reserve is watching, you're going to see about a 2.8% inflation number very soon here. So that's my prediction on a lot of those things. So now let's get over to the markets. We want to get that market report to see what's going on. So if you go to that, all you see everywhere, and I've never seen this in my 30 years of doing this, is the Fed. The Fed's now controlling the stock market. The Fed's controlling the jobs market. The Fed's controlling the housing market and interest rates. The Fed's controlling all this. So we really need to focus in now on what's going on with rates, because the Fed has a huge control piece over this. So we want to go over to this piece right here. What's the effective rate right now on the federal funds rate? That's the Federal Reserve, the number or the interest rate that they control. Right now, that number is 5.25. So Federal Reserve in New York published it. The federal funds rate today is in the range of 5 to 5.25. Okay, so what we watch what the Federal Reserve, what's they're supposed to be doing. So there's actually a website, and the Chicago Mercantile Exchange does a fantastic job at this. They have a tool. They have basically the futures market that's guiding us on what the Federal Reserve is going to do. So if you go to CMEgroup.com and you scroll down through here, and I'll have this link down below, you can see where the federal funds rate is today and what the expectations are the Federal Reserve is going to do at the next meeting. What we're trying to do right now is figure out what in the world's going on with interest rates. So if you go to this chart and you go over to here, the next meeting coming up is this month in July. It's July 26th. And right now, the federal funds rate, as we just saw, is 5.25. So it's right in this range right here. You can see now 5.25 to 5.5. There's almost a 90% probability that on the July 26th meeting, the Federal Reserve is going to raise rates another 0.25%. And then these are starting to go down. But in the November meeting, they're saying, man, there's a little bit over a 32%, almost 1/3% chance that they're going to raise rates again. So what's my context of all this? Here's my take on it. Like I just said before, I think we're going to see a pretty big move in the inflation rate to the downside. Federal Reserve is going to take their foot off the brake. They might make a move in July. It depends on how the economic numbers come, but they might make a move in July. So I think at that point, we're going to see inflation really start to come down. Okay. The Federal Reserve is going to take their foot off the accelerator on interest rates. But now you're going to start seeing maybe rates starting to come back down. Well, would that then prompt more people to get back into the market because they were waiting on the sidelines for what? They're waiting for a crash. But they're not going to get a crash, but they might get a reprieve in interest rates to say, well, housing might have just got a little affordable based on rates. So that's my analogy for today. So guys, take as much of this as you can, dissect it. If you have any comments, please share those down below. But when you're giving us data that if you're putting information down below, help us learn. Don't just say, hey, the market's going to crash, you're an idiot. Just give us your context. What's your market doing? What is it looking like? What's your situation? Have you talked to a realtor? Are prices, I'm saying prices at 350,000 and lower, they're going like hotcakes. We got contracts on 4th of July, believe it or not. That's why we're here today. We're working on contracts that we got yesterday because people are out there bidding on homes, hoping to beat out the next person looking to buy that house. So that's the context today. So with all this being said, what the world's going on with the mortgage rates? So to do that, what we do is we go over to the MBS Live. This is what I see on my screen on a daily basis. This is telling me what's going on with mortgage rates. So what we look at when we follow on this channel on a daily basis is what's the mortgage-backed security? What's the mortgage bond doing on Wall Street? So this is telling us what's happening to the price. All you need to know is this. Here's the price of the mortgage-backed security bond right here. If the price is down, means rates are going to go up. Okay, there's an inverse relationship. There's a yin and a yang. So when this number goes down, rates go up. You can see it just moved from 20 to minus 17, so not as bad. So we're going to probably see today is about an 8.08% increase in rates today. Well, let's get over and see where they are. So to do that, we go over to the MBS Mortgage News Daily. We go right here, mortgage rates, click the rate sheets. These are the top 6 products people use when they're buying and refinancing a home. So if you want to find out what you qualify for, what kind of rate can you qualify for, what kind of payment does that put you into, all I need you to do is go to therateupdate.com, and here's our website. There's a couple of different ways you can reach out to us if you're in need of, just kicking the tires. What can I qualify for? How is my credit good enough? Do I make enough money? How do you find out if you can qualify to buy a house in 2023? Well, simple. One, give us a call, 844-775-5626, or if you're ready to get started right now, click the Apply Now button and you're on your way. But you might say, Dan, when I watch your videos, I love them, but you guys aren't around. By the time I get home from work, nobody's there to take my call. What can I do? We can schedule a consultation right down below. That you can schedule a consultation with me or one of my mortgage advisors one-on-one so we can answer all the questions that you have. So sorry for the length of the video today, but I just want to explain to you guys, really housing 2023 is so much different than housing 2008. Make sure you're aware of it and you don't get duped like a lot of people are sitting on the sidelines right now saying, where's that crash? So thanks for watching, guys. God bless. Hope you have a fantastic day. See you tomorrow. Bye-bye.